Hey everybody, it's Jeff here, Jeff Kikel with BKA Wealth Consulting.
And Eric Boyce here with BKA. Appreciate you taking the time to visit with us, both our clients and friends along the line here. Obviously, we're coming to you on a day in which the market was down, at least the Dow Jones Industrial Average was down 2,000 points. And so we're entering our third week of market turbulence, if you will. We've had a fairly quiet period of gradual upward sloping growth, and then obviously the the emergence of the coronavirus as a threat has caused a great deal of fear and volatility to re-enter the markets. And so we just wanted to take this opportunity to get out in front of you and kind of share some thoughts and some feelings and maybe even a little bit of data that we see. And I think the takeaway message is that we're doing our part on our side to strip away the emotion and look at everything objectively, look at the data and do the analysis and do our own work, frankly, and not take talking points from someplace else, but really just kind of looking at it ourselves. And Jeff's going to spend a minute kind of revisiting the virtues of long-term planning, and then I'll get into very briefly some of the mechanical things that we've done in portfolios here recently.
Yep. So one of the things that I live a life of long-term planning for clients. I've been doing this for
25 years, and we've seen these type of things happen. One of the strengths, I think, of what we do from a firm perspective is everybody has a financial plan. That's an absolute requirement of doing business with us. And the reason for that is it allows us to really be able to figure out what that goal is from where you are today to where we're trying to go, and figure out the probability of that actually working. And one of the things, with our probability scores is we want to see a score of 85 or higher. Well, one of the things that takes into account in that probability score is down markets like we've seen, this craziness, the volatility that we've seen in the markets. And still, with all that volatility and craziness, we still have a consistent probability score. And I've had several conversations with some of you that are out there today, and several clients and even a couple folks that we have done financial planning for. And quite frankly, we were looking at the probability scores, we're pulling up the financial plans, and with all the craziness, all the volatility, all the things that we've seen, most of those probability scores have not changed one iota during that time period. So that tells me that that allows us to step back from some of this craziness and volatility and everything that's going on, and it allows us to take some of that emotion out of what's happening in the short run, knowing that over the long term this is going to work, and there's going to be opportunities for us to take advantage of some of this as the markets recover.
Well, and so with that in mind, I think our job is to kind of be very diligent and like I said, be somewhat mechanical without having the emotion. I think it's very tempting to say that the market's selling off, so we got to go to cash, and that's kind of a very conventional way of thinking about it. But in sometimes you get a downturn like this, and it really is a source of opportunity. It allows you to do things to take advantage of some of the pricing dislocations. And I think as we've talked, if there was ever a time for this to happen, now's a good time just from an economic standpoint. We've had a great, obviously we've got a great jobs market. We had a great jobs report last week. The service sector, which accounts for very disproportionate percentage of our economy, just had another strong month. In fact, one of the stronger readings that we've had over the last several years. And I wouldn't say that there's an infinite amount of momentum, but the economy is in pretty decent shape, and the consumer has been in pretty decent shape. Now, obviously, we want to watch that, because if the consumer develops enough fear that they pull back, then that could obviously be an impact to our economy. But so far, what we've seen is not been a lot of impact here, but more of the impact overseas. And so with that, some of the changes, very briefly, that we've made, just to kind of tweak the portfolio. We've taken some of the international exposure off. We've enhanced the quality of the companies that we own over, or say that the quality of the holdings that we have on the equity side, and kind of favoring large cap, well-known names with the best financial statements that have the best ability to weather any kind of a downturn. We've done that, and then we've taken some improved kind of the credit quality of our fixed income holdings. And so we've altered that to increase the credit quality because, one might fear that if we do have a downturn, that the credit quality of some of the things that, some of the, lower quality bonds would erode. And so we want to get out in front of that. So we've tweaked that a little bit. But again, we're still following our investment policy statements, which are a direct byproduct of the financial planning process. And so we're still staying in our ranges. We're taking the emotion out of it as much as we can and just being diligent and say, well, okay, well, obviously we've got to reassess things because coronavirus has kind of changed the landscape a little bit. And, now with over the weekend, the OPEC, just call it the conundrum with Russia, that after the price declines in 2014, 2015, it became OPEC +1 with Russia, and they couldn't agree. So there's going to be some disruption related to that, and that was just fuel on the fire. But these markets, will turn, over time. And we do think that there's going to be an interim disruption with increased volatility. But we have seen a coronavirus type event several times in the past, and in each occurrence where there has been an economic impact, that economic impact has been recovered, afterwards, and the market anticipates that and recovers, accordingly.
Excellent. Well, once again, the door is always open for y'all. We're available if you've got any questions. We're trying to reach out to as many of you as possible, and that's part of why we decided to do this video today, was to be able to reach as many of you as we could in one day. Look for more videos over the next weeks here as things change, as we see things turn around. We want to keep you up to date as much as possible. And of course, if there's any concerns, or if you feel like, hey, well, maybe we need to make some adjustments, that's a phone call away. Let's get something on the books and let's take a look and see where we're at. Let's review the plan. Let's look at the existing, portfolio, and then make whatever changes we need to.